Instincts. What do you think?
Those earnings would have been better if not for Kilmeade's paycheck. So I sit next to him so I can take a shot. I'll tell him to his face later that I just
guys,
below the belt.
Main Street, they're not, sitting around looking at this number this morning, but intuitively they understand what's going on. And I've done a lot of work on this, and there's two interesting things that are happening, I think, that bodes well actually for Donald Trump. I've gone back to 1984, and two things have happened. GDP growth, we talk about that a lot, not being over 3%. It doesn't have to be great, over 3% for someone, the incumbent party, to be elected. It just has to be better from the previous year. We're on a cusp right now of GDP being worse than the last year. Secondly, the 90 days going into the election, if the stock market is up, the incumbent party has won every year except for that 1 year when Ross Perot ran. Our stock market, of course, is down 90 days going into the election. And I think this jobs report is another thing. People don't know these numbers, but they feel them. They live them. So they don't have to be economists, but they do understand this stuff. And what we see here is just makes official what Main Street already knows.
And I want to make a point because, I work with hundreds of companies across the U.S. And they do have jobs, and they want to hire. We still have a challenge with labor participation. There are people that don't want to participate in the economy. And, Charles, we've talked about this before.
Right. They've given up.
We have more people on food stamps in this country than ever before. We have more people on social assistance programs.
Yeah.
So, yes, I am disappointed that we've only created 161,000 jobs, but we have some other issues that really need to be fixed.
Yeah.
Well, to get people back and participating in this economy.
Essentially, I've crunched some numbers on this, and for example, if you're a single mom in Hawaii with two children, you effectively could get to the tune of $60,000 benefits.
Right.
So in other words, between the food stamps, between the various forms of welfare, you're talking about money that is a lot. In that, if you were to go out and
makes
say
a big
work
difference.
as a telephone operator or as assistant, I don't know if you would get the $60,000. And guess what? You're going to be gone from your kids all day.
They work in paycheck to paycheck.
So people are, in some cases, to your point, making choices that are based on, frankly, perverse incentives that we're setting up through Washington.
Let's drill down these numbers. Peter Barnes broke the news at the bottom of the hour about the 161,000 jobs created, which was below expectations. Peter, what else do you have?
A couple other things. 142,000 of those were private sector, so 19,000 were government, about split between the federal government and state and local government. So private sector job creation was not as strong as expected. Also, this labor force participation rate, which you were talking about, did tick back down in October to 62.8% because the labor force shrank by about 200,000 people. Now we see the labor force bounce around in recent months, but it's been stuck at these kind of 40-year lows since coming out of the Great Recession. One piece of good news: U6, the largest measure of the health of the job market, total unemployed, marginally attached to the workforce, and people working part-time for economic reasons, fell to 9.5% in October, and that's the lowest level since April 2008. So you go ahead.
Dagan was looking at wages. Do you want to give us your color on wages there, Peter? Because obviously, over the last year, you look at wages having moved up 2.6%, but month over month it was 0.3%. What are you seeing?
So it was up 0.4% in October, which made the year-over-year increase go up slightly to 2.8%. That's not, it's not the 3 to 4% that we like to see in a really healthy economy, but it's not the 2% that we saw, a few years ago. So it's getting better, but it's not where Janet Yellen, for example, would like it to be.
Creeping up, Dagan.
Yeah, 2.8% is a pretty nice tick up when it was at 2.6% in the month of September, 2.8%. The question, of course, is this lasting or is it momentary? And Peter, is there anything in the release, I'm reading it, about, in terms of why the top line number missed, about the hurricane? There was some expectation that there would be about 10,000 jobs that weren't counted.
Yes. So there is a question that the Labor Department surveyors ask about bad weather, and in October for the hurricane, in one of the surveys, 238,000 people said that they still had a job but couldn't go to work because of the bad weather. In the payroll survey, the 161,000 number, we did see, for example, retailers shed 1,000 jobs. They were up 22,000 in September. We saw very little growth in leisure and hospitality. Construction was up 11,000, but it was up 23,000 in September. So in some of the payroll numbers, you could see where the hurricane might have prevented employers from hiring people in certain sectors, knowing that the hurricane was coming.
And it's good that you mentioned construction. Construction has been an area that we have been seeing jobs moving up. Market reaction's interesting, Charles Payne. Down, and we've worsened after this report. What is this telling us?
Well, I've been saying for a long time, particularly where valuations are right now, the market really does need good news to be good news. You know, you can talk about the Fed all you want. Listen, in Japan, they have negative rates. The Nikkei is getting smoked.
Yeah, smoked.
Europe has trillions of dollars at negative rates. Their markets are getting smoked. So there's just so much that central bankers can do at this particular point. And with valuations of where the market is right now, you have to have better economic data to justify them at these levels for the most part.
Because they're looking at earnings.
Right.
Look, earnings were up a fraction for the third quarter, and that was really good news.
Yeah, you know, it might be good news that we finally broke the snap too, right? Of year-over-year declines in earnings that goes back to 2014. So, you know, but again, this is all sort of stuff that we used to rely on, right? We could see green shoots and this far into a so-called recovery. You know, we should have oak trees, not green shoots.
Right. Well, that's a blast from the past. Talking about green shoots. Jack Otter, how do you see it? Market reaction is negative.
Yeah, I don't think that, frankly, this is a big enough number to make the market think anything has really changed. So, for instance, the market thinks that the Fed's going to hike in December. This is not a bad enough number to make us think, oh, wait a minute, they're not going to move, nor is it great enough to say they're definitely going to move. You know, one reality is, in the hour after the Comey news came out that he was looking at Anthony Weiner's laptop, the market lost 1%. It's been down every day since then. I think this isn't quite an election-moving number, but it probably confirms the trend, which is Trump closing in on Hillary.
Yeah.
The market sees that, and in the short term, that is not a positive for the market. It's uncertain. The market doesn't like it right now. In the long term, it might be great, but in the short term, it's not positive.
FBI